My name's Ralph Tiergart. I lead education and professional development for AAHOA. And we are absolutely delighted that you all have made the decision to join what, in my humble personal opinion, is probably one of the most important events that we may offer to our AAHOA members this year, and that is an inaugural engagement with universities across the country to participate in the 2024 AAHOACON Collegiate Championship Hotel Turnaround Competition. You're going to hear a lot more about the structure of the competition, how it got, what's involved from our host, and you aren't going to have to listen to me for long because I'm not the actual host. I'm doing the introductions here, getting things kicked off, but I think you're going to find what we're going to talk about today a fascinating journey in how young people at the university level are learning about the hospitality industry and are able to apply what they've learned into a unique, immersive learning experience that is an industry first. AAHOA is offering an industry first, immersive learning opportunity at the university level for students to connect what they've already got with what they're going to need for the future and broaden their understanding of hospitality, because these are students, and I know our theme is for tomorrow, but you know what? For these folks, it's for today. They are thinking about their futures and their careers today. And that means that decision that we all made at some point in time, we wanted to be in this business, in hospitality, and what it's all about. And so they have been on that journey, and they're wrapping up their university program studies and about to enter our industry. We are honored to have you consider hospitality as a lifelong career, which has been so important to myself and I know everybody else in this room. So welcome to the community of hospitality by participating in this college championship. Thank you. We started this journey at the beginning of the year by making an opportunity to quite a few universities to consider what we're doing to participate. We let them know up front that this was going to be first come, first serve on a limited basis to universities that really wanted to try something new. And so the first ones to answer the call and make that commitment, they came to this competition. Again, I don't want to steal the thunder of our real host, but this is a competition that began on the analytics side with a simulation competition, which has now taken us to the finals. We call this finals for a reason. And it's a good thing Mr. Wonderful was here yesterday, because this is going to be kind of like a Shark Tank thing. And I think you're really going to get a kick out of it. So again, thank you for being here. And thank you also. First, I want to say thanks. University sponsors, I know you're in the room. Would you please stand up if you are a sponsor, a university sponsor that answered the call and decided to bring your institution to this competition? Just stand up, let the room see who you are. Thank you for doing that. These are the sponsors of our finalists today, and we are delighted that they made the decision to answer the call and be part of this inaugural Collegiate Championship. And I also need to thank the people that are going to make this event, the Shark Tank event, happen for real. So please, it's my honor to introduce our sharks and the folks that are going to help make this session really come to life. I'm going to start here on my left. Addie, why don't you, if you wouldn't mind, tell the group a little bit about yourself, your company, and what motivated you to come join this crazy thing called the Collegiate Championship.
Thanks for having us. Addie Bupati. I'm a partner with a group called Noble Investments based out of Atlanta, Georgia. We set up as a private equity fund that specializes in the hospitality space. We're going in on our 30th year in the business. I've been with them for about 25 of those, and certainly been through a different journey of various parts of the business before I oversee the capital deployment and the dispositions and legal side of the business. We've done about $6 billion worth of investments over our investment timelines, and we focus predominantly in the select service, extended stay, and compact full-service boxes. What got me here? One, kudos to you, AAHOA, to recognize the need to capitalize on one of the largest groups in the hospitality industry. AAHOA is already has that description for its membership to be able to capitalize on the youth from that group. If you ask any of the CEOs, any of the folks running business today, if people running it, the labor and how hospitality being a education as opposed to I fell into it, which is a lot of stories. If you look back to people that have been doing it for a long time, there's a lot of, oh, I got into it by happenstance. Having it being a career and education from day one to go into it is the best way to grow them and keep them. So kudos to you guys to get it going. I feel like giving back is one of the key pieces of success. There's a journey that everybody goes through, and sharing it and allowing others to learn from it and build on their own journeys is an important part and a part of Circle. So that's kind of one of the reasons I felt want to be here. And finally, for all the people that are going to present, wish you all the best. It takes a lot to put all the things together to be here. You're at the home stretch, so this is the Final Four. Obviously, it's in keeping with March Madness, so we look forward to your presentations, and again, good luck with everything.
Helen, your turn.
Good afternoon. I'm Helen Zaver. I'm with Colliers Hotels. I am a broker since 2005. I do enjoy this side of things, and part of AAHOA since the early times, since the beginning. I'm a former board member as well for AAHOA. I have a passion for being able to grow our young students into hopefully excellent hoteliers. That's what we'd love to see. And I think AAHOA is the right vehicle for that as well. So being able to be a part of a competition that's just starting out, I want to see this thing grow tenfold. And whatever I can do to help, Ralph knows I'm here for it. Thanks.
Good afternoon. Actually, good afternoon. Can you hear me? Yeah. Perfect. Yeah, good afternoon. Sorry about that. I'm Greg Friedman, CEO of Peachtree. I started my company in 2007. We're a vertically integrated private equity firm that invests across hotels and other commercial real estate assets. We invest up and down the capital stack. So we invest, within the hotel space, we invest very heavily across credit as well as equity. So we go out and acquire and we develop, assets on the equity side. We finance a lot of groups to go out and acquire, develop, recapitalize hotel assets as it relates to the debt side of our business. And as I mentioned, we're vertically integrated, so we own an operation platform, a development company, a lending platform, an asset management company, and several other companies that help to really optimize and drive the returns on the investments that we're making, across the hotel space as well as outside of the hotel industry. But the reason, I think it's critical, for what AAHOA is doing, it's truly what Addie said. I think it's great to help, drive that interest within the hotel industry and help, start at an early age to build out a workforce that really is excited about getting in our industry and helping create, hopefully create the next, companies that are able to go on and be the next Peachtree, Noble, or whatever, company it's going to be, if it's on the investment side, if it's on the operation side, development side. And it's pretty exciting to see that. So I'm excited to see the Final Four. And unfortunately, I guess I grew up in Alabama, so I'm a huge Alabama fan. So I'm glad Alabama's in the Final Four. So I wish there was somebody from Alabama here, but unfortunately, I guess University of Alabama didn't participate. So I'll be rooting for all four teams to win. So
there's no insider trading, Greg.
Yeah.
And we have a special guest, and that special guest is Heidi Anaya. Heidi heads up education for Russell Partnership Technology. This competition would not have been possible without Russell because it began with a simulation. And a simulation, as you may know, simulations can serve many, many wonderful purposes and are being used extensively at the university level in education. So this competition was placed on a Russell platform, and I would like to invite Ms. Heidi to come up and talk about Russell and what made us decide to venture in the world of simulation.
All right. Good afternoon, everyone. My name's Heidi Anaya, Head of Education with Russell Partnership Technology. We are a simulation company. We've been in existence for the better part of 20 years, and our focus is creating hotel simulations that are used primarily in academia, but are also used in industry as well. And the idea is to put students into the driver's seat, allow them to take on the role of general manager, run their very own hotel, in the safest possible environment. No one gets fired, no one makes a hotel go bankrupt, and I dare say they have a little bit of fun as well. I verified that with the students yesterday, and they all said they had some fun, but they also learned a lot too. We also provide these simulations in industry, and for very much the same reason, to be able to learn new skills or also to be able to enhance skills, and thereby really helping people to excel in their professional careers. At present, we're working with over 200 academic institutions around the world in over 37 countries. And we also work with a number of different hotel companies, everyone from Wyndham to Marriott to Accor to Best Western, and certainly also providing certification programs as well. In case you're wondering what the students did this week, they all in their teams took over, mood lighting, I like that. They all took over an underperforming hotel. The hotels were all identical at the very beginning. No one had an advantage, no one had a disadvantage. And over the course of 2 years of simulation time, which went by very, very quickly, right, everyone? Yes, heads are nodding. Fastest 2 years they've ever experienced. They operated their properties, and that's where the competition began, because some may have had a rate strategy, some may have focused more on their associates, some may have spent more money on marketing and advertising. I think we're all gonna have a nap here in a second. And bottom line, we've ended up with the top four. Who's in charge of the lighting here? We ended up with the top four, and those were the hotels that were operated the best overall, looking at a number of different metrics. And today we're gonna learn a little bit more about those four properties, and then our sharks are gonna ultimately make a decision as to the best property. So I wanna give a very big thank you to Dwayne, to Ralph, to AAHOA for this inaugural competition. I have no doubt in my mind that this is the first year of many, and what a terrific opportunity to bridge the gap between academia and industry, and really prepare some of the future leaders to head into jobs in the hospitality industry and be extraordinarily successful. So thank you for allowing Russell Partnership Technology and myself to be a part of this. And thank you all very much for being here today.
Heidi, thank you very much. That's awesome. We are now moving into the actual competition itself. So we've all watched Shark Tank, so you kind of know where you need to go, right? Yeah. Go be some sharks now. I have one more incredibly important person to introduce, and that is Dwayne Zuber. Dwayne, yeah, he's doing this, yeah. I'm sorry. So Dwayne is not just an owner of a management company. His company owns and operates hotels, so he is in the same business all of you in this room are in. But he also teaches at the university level. And so he is already finding ways to bridge the real world with the academic world. And as he and I were talking about things that we both dreamed of doing, we ended up at the same place. We both dreamed of finding ways to bring immersive learning through educational opportunities to students who want to be in this business, students who've chosen hospitality as a future career pursuit. And so while it was a collaboration, ideas are one thing, execution's another. So I'm going to bring Dwayne Zuber up to the stage because he has helped prepare this, operate it, and now we get into the real Shark Tank. So Dwayne, I'm handing it over to you, buddy.
Thank you, Ralph. How are we doing today? Okay, audience, how are we doing? Okay, how many people have sat in a session and like almost fallen asleep? Come on, let's be real. The people in the back are like, yeah, this is not going to be this session, okay? This is going to be an exciting session. We have numerous teams here, 4, that are going to compete for the AAHOA championship tomorrow, okay? They're competing today. They'll be awarded tomorrow. You are part of this. There will be 2 awards given. One will be by the Sharks. They will pick their favorite. The second will be by you, the audience members. You get to pick your favorite presentation. At the end of the session today, there are buckets out there with logos in front of them of each of the 4 universities. What we're wanting you to do is when you leave, take your piece of paper and drop it in whatever bucket you feel did the best job. You good with that? Come on, let's bring some energy. These are college students. Are you good with that? Yes. There we go. I love that. I love that. Okay. So each of these, can somebody, I have the remote. Yeah, there we go. Okay. Wow. These are the universities that participated this year. We had amazing universities this year from all around the country, from Grand Valley, which is up north, to FIU, which is obviously here in Florida, South Carolina, Oklahoma State, Virginia Tech, Northwestern State, and Kennesaw State. Anyone recognize any of these teams? Any of these schools? There we go. So really, really exciting. So the premise of this competition is they all received a underperforming hotel, a 250-room, think Marriott, think Wyndham full-service hotel. You're going to see from their presentations that they inherited a hotel that was in trouble. Okay, their job was to turn around the hotel from a financial standpoint, from a guest service standpoint, from all kinds of different, they did all kinds of different things to improve their properties, okay? And they all did unique things, which is interesting. Okay, so be excited for this, okay? Come on, I want to hear you applaud. There we go, okay, there we go. So, this was a really close competition. It was incredibly close. We had wonderful schools, like I mentioned earlier, and you're sick of hearing me talk, so I'm going to announce the first school, and we're going to take off with that. So with that, Jordan, can you come up here? Jordan's going to help us today, and she's going to announce the first school in the competition. Can you do me a favor, audience? Can you smile? Yes. Listen, they've been sitting in a classroom for the past 2 days working on the simulation. A lot of analytics. How many people like numbers? Okay, only like a half of the room or a third of the room. They had to work on that. And then the finalists now have to give a presentation, which is a completely different skill set. I'm going to be honest, at 20, 21, 22, I would be terrified to do this, okay? So they're displaying a lot of courage to do this. So please smile in the audience. Please nod. Give them thumbs up. Give them encouragement. That would be wonderful, okay? Okay? There we go.
Wow. That was good. Our first team competing today is Grand Valley State University from West Michigan.
Dwayne took the clicker. Dwayne.
Oh, I took the clicker. I'm too excited.
That was a test.
Hello. Before we get started today, I'd like to ask you all a question. Who here has seen a hotel struggle before? A lot, right? Who here likes to see their own hotel struggle? Yeah, no one, right? That's because we don't seek to We don't seek to see our hotels struggle in life.
And that's exactly why over the past 2 years, we maximized our revenue potential at our hotel.
My name is Kate Snow.
And I'm Carly.
And we own the Louis Hotel. Here you can see some of our investments that we have included in our 2 years running our hotel. A lot of what we have done is newly refurbished our whole hotel. We have invested about $1.7 million into refurbishing our hotel. This included fully renovating our front desk, associate facilities, our entire environmental program, and our bar lounge area. We also did smaller renovations on our other areas inside the hotel, including rooms.
And then next, we also focused on our advertising. It's really important that we're hitting certain target markets and different marketing segments to maximize our profit coming in for these different groups. That way, we're able to price our rates competitively.
A big department within a hotel is obviously the food and beverage department. You want to make sure you're not only maximizing in your rooms, but your food and beverage. We can see here from year 1 to year 2, we did increase in our food and beverage revenue, and we received a lot of guest reviews that we had good food quality. This means we were able to stay above our competitors a little bit in having good food quality, but we weren't too high that we are driving away our guests.
Alrighty, and then we have our financials. So on here, we see a lot of different KPIs or key performance indicators from our property. Over the 2 years, we had 2 in particular that we did very well in, which was our RevPAR and our TrevPAR. So you can see before we had taken over, we have some very low rates there. We were not making a lot of money on our rooms per night. And then at year 2, after pricing our rates a bit more competitively based on the market, especially, we were able to bump those up to the highest in our local competition.
Also looking at the bottom here, you can see our rate and occupancy indexes. Before owning the hotel, they were under 100%, meaning that we were not taking any of the market away from our competition. By the end of year 2, we were able to surpass that 100% in taking away the market from some of our competition, gaining more competitive advantage. As Carly mentioned, a few of our things we did throughout owning our hotel is how we were able to achieve that.
Okay, some more of our financials. So this is our P&L or our profit and loss statement. It's a lot of numbers going on here, but we're going to focus on about 3. So the very top line there, we have our total revenue. Up there you can see before we had taken over, we were only hitting about $7.3 million for our revenues. This is before we had taken out our expenses as well as our controlled expenses. Doesn't leave us with much. But over time and minimizing our expenses, we were able to bring that up to 4.2, which is about double from when we took over.
Moving on to our next category, our gross operating profit. This is going to be the number after our controlled expenses, subtracting that from our revenue. So with doing that, main category that we focused on is we wanted to run our hotel with having a good staffing point. So when we were running it, we made sure that we were at a good staffing point, that we weren't understaffed or overstaffed. Thus, it saved us a lot of money in running our hotel.
And then lastly, the number at the bottom that we care about, what money is going into our pockets. You can see we were actually operating at a loss when we took over this property, but between what Kate was explaining, managing our staffing as well as lowering our expenses, we were able to triple that and bring that to $1.6 million.
During our time owning this hotel, we are able to add a numerous amount of services to our property. However, I only did highlight the top 2 on here today, the turn down service and the transportation van. I highlighted these because a lot of our competition did not offer these. We were able to have that unique offering to our market so that we were able to have that competitive advantage. That way, guests coming into our hotel would be able to enjoy turn down service or a transportation van while they were with us.
And then the remaining 3 on here are our facilities that we added over the past 2 years. We picked these 3 specifically because they hit our target market, which is our leisure travelers. So we picked the executive lounge, lobby bar, and fitness center because we believe these would be the best in maximizing our profit for this market segment.
Why the Louis, you're asking yourself? Why would you want to invest in us? We did a complete turnaround from the previous year to year 2. We doubled our revenue and almost tripled our net profit. We were able to do this full turnaround by everything we talked about today. We were able to maximize our marketing and advertising, lower our staffing a little bit to minimize expenses. We were able to offer a competitive rate, a competitive food and beverage segment, and in all doing this, we were able to, as I said, do a complete flip of our property.
That's correct. And going off of what Kate mentioned, not only did we turn this around, but we would consider this a full-service 4-star property based off of the renovations we've done, the facilities we've added, and as well as the refurbishments, as well as I think I said refurbishments already.
Yeah.
Go ahead, Kate.
Continuing into the future, you might be wondering, what else would you have to do? Well, in following our PIP model, we would be able to do a couple more refurbishments. You would be able to still add or change as you would like. However, a lot is already done for you. We've added numerous services, numerous facilities. We've done renovations. There is honestly not a whole lot you have to invest into right now. You can invest in the future, but however, you won't be wasting a lot of money investing right now. So I ask you, again, in a different way, who likes to see a successful hotel? Yeah, me too. And that is what we did in 2 years at the Louis. Thank you.
Thank you.
Judges, do you have any questions for us?
We don't have to go in sequence, but I'll start. Well, congratulations again. Very thoughtful and how you guys went about it and all the effort that you put into it. So kudos to get to this place and all the success of turning around a underperforming, not only underperforming, but a negative cash flow. There's levels of pain, and negative cash flow is definitely the pain that you don't want to have. So it's kudos to getting that turned around. And you spend some meaningful dollars in areas. Just kind of would love to get your thought process on how you went about picking those areas that you actually spent dollars, and how you thought that was the area that would give you the most bang for your buck and obviously end result. Just kind of getting into your mindset on how you decided to spend there.
Yeah, absolutely. That's a great question. So I think we definitely, as you saw, we spent $1.7 million on our renovations. To start, we wanted, since we're kind of in a way starting fresh, we wanted to start with a clean slate. We started with just doing a lot of general cleanings in our property. And then from there, we wanted to invest our money in places where we're going to make the most money. So we were definitely trying to maximize our profit in food and beverage. So we were doing well in our rooms, but we wanted to bring more money there. So that's where later down the line, we ended up doing that renovation on that bar and lounge, just to bring in a little extra revenue, bring in more people in another market segment.
Including that, or adding to that, we decided also we didn't do a full renovation on our rooms. However, we did a good, thorough cleaning through them. In choosing this, we thought in only a short 2-year period, taking out a large chunk of our rooms would almost diminish the revenue that we would be gaining through this time period. However, they are not dirty, they're not outdated, they are still in very, very good condition. We also decided to do the environmental program. For those that don't know what that is offering more education, more vendor education, and doing all sorts of those things to kind of help out the property, help out our employees, and doing that, we kind of maximized on that.
I actually loved the presentation. You guys did such a wonderful job. I did have a few questions for you, though. I'd like to understand, what would you do for the future so that if I was buying your hotel, do I see upside? What are the next steps that you would propose that a buyer do?
Yeah. with that, we did put our hotel at a good competitive advantage point right now. However, I think for the future moving forward is really focusing on our restaurant and our food and beverage program. You can see through the presentation that we did very, very well in maximizing our food and beverage program from what it was, but I think that can just even go further into the future, really driving hard into the food quality we're offering, the price points we're offering, kind of going through that into really maximizing the profits that we can make in our food and beverage department.
You got it. You covered it.
Adding to that too, I think that doing a full room renovation would be helpful. Like I said, our rooms were not in any outdated status. However, I think moving forward into the future, it could benefit the property.
Yeah, great job. So it's pretty incredible that you guys are in college and you're able to do this. So it's pretty cool to have that experience. But just from a standpoint of just putting the hat of like if you're going to be selling the hotel, do you think there's opportunity just on optimizing the expenses, or you think the hotel is pretty much running from an expense perspective? You're maximizing the savings there from an operational expense perspective. What's your thoughts there?
Can I ask you to rephrase it just a little bit?
Yeah, so like, is there a way do you think there's a way for a new buyer, if they're buying this hotel, do you think there's areas that they could cut down on operating costs, or you think it's pretty much, at this point, is the hotel pretty much operating as efficient as it could from your perspective?
I definitely believe we can cut down on operating costs, specifically, as Kate was mentioning before, in our food and beverage department. We are still operating at a bit of a higher expense than what we would like, but we think a lot of that is getting a better market share. And we think with another owner, they could have the opportunity to bring in a bigger food and beverage market, potentially non-resident is kind of what we're looking for, to bring in that extra revenue to then boost our sales. That way the expense doesn't seem as large of what's coming out of our revenues.
Adding to that just a little bit, I'm not sure if you could see it on the profit and loss statement because it was a little small, but our staffing percentage cut, not that we were understaffed, but that we were able to, I can go back, maybe? Yeah, right here. We're able to cut our staffing a little bit. Well, it would be on the full departmental expense. We were able to cut that though, the percentage-wise, from year 1 to year 2 in not overstaffing our hotel in the food and beverage department specifically. A lot of our expenses in year 1 were coming from the staffing, so we did slim down on that just a little bit just to help us out, which didn't hurt us at all, but I think going forward in the future, we could even play around with that a little bit more even.
Just a quick question about your guest service scores. Were you able to move them from where to where, given, I think really being able to clean up the rooms, the things that you've done, how much did it change, the guest service side of things?
So at first, in year 1 specifically, we had continuous scoring with our advertising, I believe, as well as our services. We definitely were aiming to come out with those services because we believe, especially for the leisure traveler, that's what they want. They're coming to that hotel for the experience. But then going forward from there, going into year 2, is when we actually upped our food costs a little bit, and that's when we start getting the good service scores in regard to our food quality. And if you have good food quality, you're more likely to get that repeat customer and people who are going to want to come back, whether they're guests or if they're a non-resident.
Great job.
Thank you.
Thank you.
Thank you. Oh. Yeah. Just hand it. Yeah.
Awesome, guys. All right. Our second team competing for today is Virginia Tech.
All right. Oh, hello. Is my mic on? Hello. Check. Mic on? Check. Check. Oh, nice. All right, Sharks, we have an exciting proposition for you today. I'm Ellie.
I'm Ada.
And today, well, 2 years ago actually, we acquired The Summit, which is a 250-room hotel with 2,000 square feet of meeting space and a 125-seated restaurant. And it's located in a metropolitan area close to business centers, universities, and entertainment.
So there's many exciting opportunities for growth coming to the city. These come in the forms of a new civic and conference center. The regional hospital is doubling its services and facilities, and there are 12 new companies coming to the area. The Hotel and Tourism Association has also tripled its budget for the promotion for leisure travelers. Over the past 2 years, we've made many new improvements to our property. We put in a fitness center, a foreign exchange directed specifically at our business clients, a lobby bar, a lobby kiosk, and express check-in and checkout. As Addie, I know that you value a seamless guest experience and also environmental programs. So we've renovated our environmental program and brought it up to a 97% in our reputation management. While looking over our market share, we noticed that our largest market share comes from the business segment. And so to that end, we brought in a new business center, executive lounge, and renovated our meeting rooms. Because as you say, Greg, in our business, new wins. In our first year we took a business that was operating at a negative $1 million NOI and brought it up to over $2 million in NOI within the first year. In our second year, we focused more on trying to improve our employee satisfaction and competency in order to provide our guests with the best possible service.
All right, for our financial overview. So when we came in, we have over 100 in all indexes, ADR, occupancy, and RevPAR. In the previous year, they were all below 100, with occupancy at 41%, RevPAR at $51, and TrevPAR at $79. The year after we arrived, occupancy rose to 60%, RevPAR nearly doubled, and TrevPAR rose to $132. And in the previous year, food and beverage expenses were 134% of all food and beverage revenue. Gross operating profit was 2.31% of all revenue, and net operating income was a negative $1.8 million. The year after we arrived, we saw a profit in food and beverage. Gross operating profit was 37% of all revenue, and net operating income was a positive $2 million. As for our opportunities, we are in the top 3 for gross operating profit and not net operating income. We are not number 1, but I would like to propose this. Would you buy stock at its all-time high? So we already have cash flow coming in, but with the backing in marketing and expense management, we think that this could grow even further. Now with TrevPAR, our TrevPAR was low compared to our competition, but we believe that this was due to food and beverage. So our food and beverage income represented 11.66% of profit in year 1 and 6.89% in year 2. We believe that we can grow this through marketing efforts and increase our revenue for food and beverage. I'll get back for a second. And we believe that our labor costs were one of our biggest troubles in food and beverage operations. We already have food and beverage revenue, but we believe we could grow even further through stronger expense management, especially with labor costs, and continue to grow our food and beverage profit. So with this backing, we believe that we can take an already profitable hotel and make it even more profitable.
So as you can see, we have a strong property in our hands with over $2 million in capital investment made in the past 2 years. We're ideally located in the central business district of the city with easy access for our guests to all the amenities that the city has to offer. In the span of 2 years, we've brought in over $3 million in NOI with room for growth with the proper expense management in place. So strike while the iron is hot and take the summit to greater heights.
Thank you.
Thank you. Any questions?
Excellent presentation. You guys did a great job turning a hotel around tremendously. I do have a couple questions for you, though. I love your future plan. I think the opportunity is there for growth, and that's tremendous how you laid it out. It's mainly in the food and beverage area. I did want to understand from year 1 to year 2, is the NOIs went down significantly as well. Was there something going on that you can help us understand? Was it the market? Was it the hotel?
Right, so that was mainly our expense management. So while our F&B in particular, we actually increased revenue from year 1 to year 2, but as we put more money into employee salary and wages in year 2, which affected our NOI greatly, especially in F&B, and brought down our NOI in that segment, in that area. And then our market share changed also a little bit. We stayed kind of steady in business, but we increased in our tour group and large group and small group, and we decreased a little bit of our market share in small group.
All right, yeah.
Good job, obviously, but the way you approached, you went through what the new demand was coming into the market, and you started, understanding the customer between your business customer and the leisure growth that was coming in. So those are very key parts of, business development. So it's great that you, identified those things and kind of creating a plan. So kudos to you there. Along the lines of Helen's, kind of the change that, you had a very successful year 1 and there were adjustments made to year 2. You had made a statement that employee satisfaction was a driver for year 2. And do you feel that some of that expense in year 2 was that kind of more a one-time thing, that as you were focused on that element and that may not be in the future years, or do you feel like that is kind of where the expense is going to be? So.
We believe that so when we increased salary a little more, compared to our comp set, we went from last to about 8th place. We're hoping to probably increase this a little more, probably for guest competency, guest satisfaction. So yeah, and competency.
And I think we just, with our inflow, we had a big boom of business from the first year, so we're trying to kind of mitigate that, and I'm making sure to keep that up. So I don't think it should increase that much. Just getting the right management in place to really have things go much smoothly and much better. We were kind of just trying to deal with like the new business, all the new business that we had in, and trying to maintain the level of service that we had been providing so far. So it should definitely go down in the future years with the right management.
Great job. So I know it's not easy doing this, and it's one of these that, in your eyes, just going through the numbers, because there's a lot happening between, obviously year 1 you have huge improvements, and the performance, year 2 it seems like it's, revenues are sort of flatlining out, and then your expenses, as we've sort of talked about, but it's probably not even a question. It just seems like as you're looking at it as a buyer, it's almost like you almost feel like there's potentially opportunity there, to your point.
Absolutely, yes.
And because there's a lot of, it seems like the margins, the gross operating profit margins, have, just looking at just from more of a macro view, is gone from 37% to 33%. So it seems like there's got to be, just although you had a great year 1, it seems like year 3 and 4, if you can find the right operator, to your point, it should do a lot better. So great. This was a great job on y'all's part on doing the presentation. So
Thank you.
Thank you.
All right. Thank you.
Good job, guys. Okay, our next school is, won't mess this up this time, Oklahoma State.
Okay, hello everyone. Oh, my mic. Yeah, over there. Hello, hello. Okay. No, it's not working. Sorry. Okay, sorry. Bear with us.
Can you check if everybody's still smiling?
Oh, pretty much. Hopefully nobody's feeling sleepy here. Okay, hello everyone. Hi buyers. My name is Lindsay and this is Monica. Obviously, we are foreigners, so English is not our first language. If we make mistakes or misunderstand your questions, please allow us to start over. Okay, the reason why we are here today is that what you need to know, what separates us from those hotels, those great hotels. So we're going to talk about a little bit about the success we've made, including the very good GOP, which is gross operation profit and net operation income, and the success strategies that we made to lead us here. And yeah, I think by the end of this presentation, you will find out this is the best investment opportunity.
So let's go. Let's see about the Hotel Era Point. That's why it's not happening. Okay. I'm new here, that's why. Okay, let's have the business summary. As you can see, the operating data of the 2 years of our hotel, year 1 and year 2, we are doing well. Like if you see the room revenue, the percentage-wise, we are doing 70% revenue we are making out of room revenue, and 24% we are making money throughout the food and beverage. As for the year 2, we are making more than 70, like 71% for room revenue, and 22%, more than 22% for food and beverage. If you'll see our gross profit, gross operating profit, percentage is more than 38% for year 1 and 37%, more than 37% for year 2. If we'll talk about the dollar kind of cost, if we'll just calculate both of the year, it's more than $5 million. And the next one, the financial overview. If you see the occupancy when we took over the hotel, yes, we did well. Like we did more than 58% for 1 year, and for second year, we did more than 55%. If you just look over the occupancy index, it's more than 55% for 1 year, and more than 100% for second year, means we are stealing someone's market share, definitely. And regarding, as you can see, the revenue part, we are making money everywhere for year 1 and 2. Like the gross profit, we are averaging, like for year 1, we are making over 38%, and for year 2, we are making more than 37%. Now, we can just see the property overview. For this also, we are making extra money for our hotel so that we have added the facilities for our customer as well, like the fitness center, the lobby bar, the lobby kiosk, the foreign exchange, and the express check-in and check-out. Yes.
Okay. Which one? Sorry. It's supposed to be. Yeah. Okay. We know that we're talking about numbers and money and like profits and this kind of things, but this is what makes us happy, right? So I'm just gonna add a little bit more about something we think that's very essential for the property. Oh, sorry, the wrong one. Okay, so we did a little bit of refurbishment because we know all the hotels, like they want to do renovations to keep more, to keep being attractive and attract more guests to come here. But because everybody knows and the hotel is losing money at the very first beginning and we don't have the money to do the big renovation and we don't want to risk that, we decided to do a rolling soft redo refurbishment. And this is the market survey about our reputation about refurbishment. I think even without spending a huge amount of money, we still managed to cover all the parts of the hotel and we achieved the goal. And I think that means with every penny we spent, we made it count. Okay, so not only that, I think we should look at the trend thing because you can see, obviously, the property is losing money. Everything comes in like red. It's not a good thing. But since we took over, you can obviously see everything is going up. The total revenue part is increasing steadily. The net operation income starts to be positive since the third month. And obviously the GOP, the most important one, we are like rising like jet. Yes. Yeah, so okay, but I want to enhance one thing. Everybody knows that success at once or like in 1 month doesn't mean much. So the hard part is to maintain the trend. So I think, and we think, we tried to do that, and we did a really good job because with these tigers, they're this kind of intense competition we had here. We not only survival in the jungle, we made it to the top. Because the market reports say that the overall market GOP is around 31.4%, but ours, you can see ours is like really high, even for our lowest one is like above that. So our overall GOP for year 1 and 2 is over 38. Yes. So that means we did really good. I think with all this kind of work we've laid and the plans we have for our future, so this is the only beginning of our climb. And our arrow point is not just a building. It's a new chapter that waits for our new owners. Yes. So we invite you guys to join us to start your legacy. Yes. Okay. Thank you. Thank you.
That's fine.
Great job. So, like, what's, from your perspective, like, like, if we're going to come in and join you guys, like, where's the biggest opportunity to drive? Because it seems like you're doing well, you're driving, your GOP margins, as you mentioned, you're driving profitability. What do you think's, the upside here?
Okay, I think in my perspective, there are 2 areas, at least 2 areas. First of all, we can see we still have room to grow in the revenue part, especially room revenue part, because there are still a lot of, we can steal a lot of from them. We can improve our ADR, of course. Mm-hmm. And of course, for the occupancy part, we mainly focus on the business standard room because we have a lot of meetings coming and we have good facilities. So that means we will continue to have that. And beyond that, we still have like leisure park premium. Mm-hmm. That's like newly renovated, so that will bring us a lot of money. And another part is we have noticed that we have a little bit like higher turnover. So that's a bad part because we trained our employees very well, but if they like keeps going out, it will cost us quite a bit.
Yes.
So we should save a lot of cost, and we should do like focus on that part because we can like increase a little bit of their salaries and like to balance this kind of cost.
We can balance the expense basically.
Yes.
Yes, and we can make money throughout that.
Yes, and also for food and beverage part, we still have a lot to like improve, I think.
Great job. You guys did a wonderful presentation. I do want to actually mention, you know, I was looking at your NOIs and they went down in year 2, but then you explained that your renovations were in phases, which you know, I would not have known unless you actually brought that up. So great work on that part too. I do want to also ask you about, I know we now understand the upside is there. What would you do in the future on the renovations part, or what other areas would you improve on if you continued owning this another year or 2?
Okay.
I think we'll focus on the food and beverage part more so that we can make money throughout of that. And regarding other, I'm sorry, I forgot your first part, the question.
It really was just a compliment for you, so I wouldn't know.
Oh, that's thank you.
Okay, so I want to add a little bit more because we can see the renovation part. We actually didn't do a very big renovation. We do soft goods redo. So that's kind of covered a little bit, but I think there's a little bit improvement we can do for the standard room because in that reputation. Oh, here. Sorry. We still can see the guest room standard is a little bit low, but we can like more focused on that in low season, so we can like improve our guest experience and bring more guests coming. Yeah. Thank you.
Excellent work. Excellent.
I'm going to echo a lot of the sentiments, and obviously a great job. You were able to get to the profitability through a expense control more than the revenue. So, and having the renovations get you to a good place is it's a great starting point. It clearly looks like there's upside on the revenue side, and I think you've got the expense to a good place, and you were able to achieve a higher NOI without, getting the revenue right yet. I mean, there's improvement, but if you look at the occupancy, there's still ways to go in a market that, you said is growing. So, having that balance of revenue and the right kind of revenue, I think that's one of the reasons why they teach you the, TrevPAR. I mean, TrevPAR was not there when Greg and I started doing the business. So that's the right way to look at it. It's not just the revenue. I mean, the RevPAR was already great, but looking at revenue and how each piece has an ROI to it and flow through. So that focus is great. I think there's room for revenue improvement, and that certainly is something that the next owner should look into. So, job well done. So.
Thank you. Thank you so much.
Okay. Better. Okay. Our last group for today is Kennesaw State University.
Thank you. Hey y'all. My name is Maggie.
I'm Ella,
And we are
the owners of The Nest.
There we go. So our property is a full-service property full of 250 guest rooms, a restaurant,
And convention center, event space, and a pool.
Our property is reimagined and we're ready to start with you all. So what we really wanted to get into here was our strategy through the business summary. So our two target markets were which we'll get into a little bit later on, but they are the leisure and the business side of our guests. So if you want to talk about our...
Yeah, the leisure and the business side of things, we really want to market to that. And we've newly renovated a couple different things to bring them up to market standard. We're bringing up the parking, the grounds, the pools, the bar lounge. Those are the things we're focusing on. And our hotel was built in 2016. And with that, we took $2.1 million to renovate and bring it all up to where we want it to be.
And with this too, we wanted to focus on... Here, I'll get into this in a second. Here, go ahead.
Alrighty, so here you can see our financials, and we're just going to walk it out for you right here. The rooms sold, we increased by 16,000, while also combating a little bit of out-of-order rooms by like 3,700, which was a lot.
And this was done while we were renovating the property. Due to the fact that it was built in 2016, we really wanted to focus on getting those maintenance things done and those soft refurbishments done to buy us a little bit more time until we were due for a renovation. And with these changes that we made, we were able to increase our ADR and our RevPAR within the first year pretty significantly, as well as in year two. And with that, we are projected to continue to keep increasing those key performance indicators. Down below too, you see our occupancy index. A big focus of ours was to do the occupancy strategy. And with that, we really wanted to increase the number of people that we got through the door. We focus a lot too on our loyalty program. So getting those people into the door, having them understand what we were about could change our reputation and continue to have those people come and visit us again. With that too, we lowered our rates to get more people through the door, which overall ended up helping us tremendously. Here we can see too, at the total revenue from the previous owners, unfortunately they only did about 7.3 million in total revenue. For our year one, we were able to get up to about 12.5, which is pretty significant. And in year two, again, it went up to about 12.8. At GOP as well, we were able to increase that pretty significantly. It went down a little bit in year two because we were doing a lot of those refurbishments and those maintenance things to get the hotel back up to where we wanted it to be. We focused a lot on putting the money in and making sure that it was up to speed and ready for our guests to come in and have an amazing time. Two, if you can see at net operating income, we were able to get it up to about 2 million, and it dropped a little bit in year two because of those renovations.
Here we see we are marketing to business and leisure guests, and with the business, I'll let Megan take that one.
Yeah, so with the business, our guests, we really wanted to cater to their needs and what was going to make sense for them, which is a little bit different for our leisure guests. For the business guests, we wanted to cater to get a business center, a transport van, and an express check-in and check-out. With that too, the reason why we focused on those primarily was there were 12 new companies coming to the area in Savannah, as well as an airport that was contracted to continue to bring guests in, which is part of the reason why we wanted to shift our focus to the business side of the market segment.
Yes, and with leisure as well, we have a music and entertainment and lobby bar. So that entertainment, leisure feel happens as soon as you walk through the door. So whether you're on business or leisure, you have that same feeling of it's home, it's safe, it's the nest.
Mm-hmm. So what's in it for y'all? The Savannah area is growing tremendously, which allows for a lot of growth opportunity, a lot of people coming to the market, a lot of that's not the word I'm looking for. Basically, there's a lot of people that are coming into the area that you can capture. There is a lot of renovations that we've been able to do so far, but there is still more value add opportunity within the property. We were not able to renovate everything that we wanted. We just didn't have the capital, which is where you all come in. We think that there are a lot of rooms to grow within the rooms, or a lot of room to grow within the rooms specifically. They are due for renovation. We did buy a little bit of time with those soft redos, but a complete and total room renovation is something that is on the pipeline. So just something to look out for. There is a lot of growth that is there for y'all to capture. Is there another slide?
It's not there.
Oh, well, it's not there. Well, thank you all so much.
Thank you so much.
Great job. Just have one question. Like just looking at the expenses and looking at like the F&B expense, for instance, the food and beverage, like what's causing it to, because it's growing so quickly compared to, just the revenues. Like, do you have any thoughts on what's driving that? And
The expenses specifically?
yeah, the expenses.
We really tried to capture a lot of because we were trying to turn our reputation around, we thought a lot of those non-in-house residents for F&B, if we were to market and advertise to that segment specifically, the more people we could get into the door through food and beverage and through our marketing for food and beverage, if they eat at our property, they're more likely to stay there. That's what our kind of thought process was if we can just get them in the door, because our reputation wasn't quite where we wanted it to be, if we can get them in the door, they're more likely to come stay with us and again and again and again. So we did kind of spend a little bit more there to just get them in the door.
Great presentation. You guys did a wonderful job. I think your numbers speak for themselves. I understand your year 2 is down because of the renovations as well, and you are trying to build up your reputation. What do you see for the future? Year 3, year 4? Why would I want to buy your hotel?
Our hotel is growing exponentially, and as we said, in Savannah market is growing as well. I'd love to see big growth in the food and beverage expenses going down a little bit, but the rooms specifically, we've done soft goods, everything's really maintained, but I feel like if we can get those rooms to a more luxury, leisurely feel, I feel like that will take our hotel to the next level.
I think too, cutting down on some of those expenses is something that we're going to be able to do when our hotel gets to the spot we want it to be at. I think time wasn't obviously really on our side. I think moving forward though, being able to cut back a little bit, not having to spend as much initially to get it going is going to help a lot.
Just a follow-up question. I know that you spent over $2 million on the renovations so far. What did you look at on your return on your investment? So, I know you're looking at future, let's put some more money into the rooms. Is the return going to be there? Did you calculate that part?
I believe it will be. We tried to focus a lot more on the amenities and the facilities just because we wanted to differentiate ourselves from the other competition, having that competitive advantage moving forward, and then also being able to put some more money into our rooms as well. Maybe not initially, but in a few years will put us that much more above our competition and a larger market share as well.
Job well done. I think, to echo some of the other sharks, I think you felt like, obviously renovation was done in year 2, some of it, I don't know how much was in year 1 versus year 2, but it sounds like there was more spent in year 2. I think it looks like you were moving the rate versus occupancy a little bit because you made progress on the overall mix, but the ratios got flipped a little. Is that where you feel it's going to end up? Like for example, your ADR index went down versus the year before, which obviously if you had to pick and choose, ADR is a better focus, especially when you have a baseline good occupancy. So is that a product of the renovation, or you feel like that's where the competition is putting you and you feel like that you need to have an occupancy premium? So just kind of thinking through, was that intentional or was that a product of some other tweak that may be adjusted going forward?
I think it's a little bit of both in a sense. I think the fact that we were doing those renovations might have had a factor on the fact that, when you're staying in a hotel and there are renovations that are happening, you're not always happy with the constant noise or the whatever's going on. So I think that might have played a factor in it as well. Yeah, I think that's for the most part it. I think moving forward though, like I said, I think the more time that goes on where we're not having to put as much investment into the actual property, we'll be able to kind of capture more customers for our actual product. We won't have to keep, making it or checking rooms out of order or anything like that. Like we'll be able to just have it run and just do those maintenance things when we, yeah.
And with our loyalty program as well, with the increased occupancy, if we can get more people in the door and they become that loyal customer that is continuous, and no matter if the price really doesn't matter to them and it's us and our people who are taking care of them that matters, I think that'll be the most important factor.
Yeah.
Great. Job well done. Thank you.
Thank you.
No mic. Okay. Can you hear me? Right. Oh, wow, I'm blind. Okay. Guys, if you've never been on a stage like this is incredibly tough, okay? And I thought all 4 teams did a wonderful job. Can we give them a round of applause? Great job, fantastic. I want to give a couple special thanks before we move to the last section of our presentation. I'd like to thank Helen from Colliers. You'll notice that all of these presentations had the Colliers logo on it. She specially designed that for us for this competition. So can we give her a round of applause? It's amazing. Just for the next couple minutes, I'd like to invite the 4 sharks up here, or the 3 sharks up here, and I'd like to ask you a couple questions, if that's okay. So my first question is, of the 3 of you, who's Mr. Wonderful? So that was great. So I just got a couple questions for you. I'm a hotelier like many of you in the audience, and I'm just curious, if I'm looking to possibly sell my hotel in the next couple years, what are some of the things that I should be doing now to prepare myself so I'm in the best position to sell it and make the most money?
That's a loaded question, but hopefully between the 3 of us, we'll get to an answer. But I think, listen, that you get to it in various different ways, but it holistically starts from when you're getting into the property, whether before you even acquire the property, you have your analysis that goes into what is it that's lacking in that property against the competition, and where do you see tangible improvements that you can make and have a business plan. So it starts from day one, you have a vision, but along that same lines, you have to have a plan of a timeline of exit. An exit is not something that you get to and say, hey, I feel like this year is something I want to sell. It's something that you get to from the get-go. You have to have a timeline. And everybody has different timelines. A family office might have a 10-year or longer horizon. A PE shop like Greg and I have a timeline that's, create the yield and exit and leave some upside for the next guy. And so it's a 3 to 5 year cycle. So having a clear mindset of where and what you're going to do with the property from the get-go will drive a lot of decisions you make at the property in how, what areas do you do the renovation? Do you do the renovation in year 1, do it all up front, so when you're looking to exit, there's not a disrupted NOI in your trailing 12 in P&L. As much as we talk about what is left for the next guy, everybody's still looking at what is your current operations to size your sale price. So as little as you have to explain your existing income, it is a better starting point than not. So having mapped out when you're going to do the renovation and when you're going to exit is a very important piece. And finally, when you are doing these targeted renovations, and you say, hey, I'm going to do this now, and then in the next buyer is going to do X. While you have that thought in your business plan, you also need to look at what areas you're touching and how does that potentially impact the next person. As an example, if you are going to go do renovations in the guest bathrooms and you're ripping out walls that disrupt the customer experience, make sure if there's other things in there that the next buyer might need to do, go ahead and do it, because you have a better cost to get it done because you've already done the bigger work of taking the disruption and opening the walls. So thinking through the next person's renovation and what could be done efficiently is a good product to have. It's not the roof. If the roof is going, it's going. It's not going to disrupt. You're going to change it. But disruptive renos that you could combine with yours and make it something that the next buyer is not going to impact your price is a thought that you want to have. So a long-winded way, your exit is thought from day one. You execute on the exit throughout your whole period and make sure your year that you're exiting is as clean of a trailing income that you can create, but there's always a story for what's remaining. So you don't need to have a underperforming hotel to say there's upside to the next person. You could have a performing hotel and there's still upside for the next person.
Yeah, I mean, I think Addie pretty much nailed it. So, I'd probably say the same things. I think one thing to just sort of highlight, I think you do make money in the hotel business, and it's all of real estate. You make it on the buy side. To, Addie's point, I mean, so when you buy something, having that plan in place, but if you overpay for the asset, it's hard to ever really make money. So it's really critical to get it right on the buy side and figure out, what your plan, what your hold period is, as Addie was mentioning. But it's also, in a lot of cases, it's just really looking at the asset and making sure you take full advantage of the asset. If you're doing the renovations, you're doing it on the front end, but also making sure you're doing renovations that are actually accretive to the performance long term. Or if you're looking to sell the asset, because not every acquisition, not every development deal that someone's going to do is going to work out perfectly. Unfortunately, we're in a business that everybody has projections, and unfortunately, I would say 95% of the projections or 99% of the projections are missed. And it's great when it's missed in the sense that you end up outperforming. It sucks when you underperform. And so typically when you're underperforming, you got to pivot very quickly and find other ways to drive value at the asset level. And so setting up, identifying those value propositions where you can potentially sell the dream to the next buyer. So if it's, setting up and getting a different brand in place or putting a brand if it's independent, if it's, taking advantage of, maybe changing up some of the, zoning with the property or trying to, find areas where you can add, to the property rooms and things like that to add that value. And you don't necessarily need to execute on that plan at that point in time. You can help identify, create that plan for the new buyer. A lot of times you can, take a bad situation and make it, turn out to be a positive outcome. So
that makes a lot of sense. On my end, I would look at some things that are a little different than the way investment groups, like both of these, that are very very good at what they do. As an owner is looking at selling their place, they should start looking at where are their capital expenses. They shouldn't be expensing it out. They need to show more coming down to the bottom line and be prepared so that their NOI looks good. Have a story in place. Do they have what's the upside here? Okay, we've done the renovations up to here. We've finished the major things that would be disruptors. What's the future going to look like? Kind of keep that in mind. The other side is also to understand if it's a branded hotel, what's the property improvement plan going to look like? When we take something to market, we suggest to owners, go ahead and order the property improvement plan for a change of ownership. Let's get it priced out. Let's not guesswork on it, because the owner will tell me, it'll cost us $500,000 to finish this. We get it priced and it's more of a $2 million project here. Well, we need a precise number on that so that buyer or seller, understands this is what it is. There's no ifs, ands, or buts about it. So those things are good ways to prep for a sale of a property. The other thing to understand, I think, in today's market, well, I think I was going to say it is a little bit of a crazy market. The capital markets have just, caused a lot of issues with transactions happening because of where interest rates are. And interest rates have also been, obviously slowing down things on our end, but it's also been something that there's been a disconnect between where sellers want to sell something and where buyers want to buy something. And it's been a seller's market previously. Last year was a very quiet market. I think this year will start flipping to a buyer's market. We do expect interest rates to start coming down later in the year, which will help with transactions. And if someone is thinking, okay, we need to sell because loans are coming due, refinance may not be possible, PIPs may be too large, and we don't have the funds to do it. All of those things should start to, think, hey, we need to start working on a lot of these things to be prepared to sell the property if needed. So.
Yeah, and I would just add one thing. I think one mistake groups make is they don't go and consult, other industry experts, and like taking Helen, for instance. Like if you're like 2 years out from selling the asset, a lot of times it's better to go ahead and get BOVs, get opinions of values, broker opinions of values, get, the opinions of different brokers or investment bankers that cover the hotel space and see what they're seeing. Because sometimes you'll be surprised. You think you're going to wait 2 years to sell, but you actually can sell today. Because to this point, this market is totally, inefficient today if you're trying to, sell assets or buy assets. And you'll be shocked at sometimes, like, very well located assets are trading still at least in my eyes, ridiculous numbers. And then there's, other assets that are, good assets, but they have a lot of challenges to them, and they're just getting totally, destroyed if somebody wants to sell them today, because, there's just not a lot of buyers that are looking for assets with a lot of challenges around them. So.
We saw from the college presentations, they spent a lot of time on financials and using the uniform system of accounts. How important are financial statements from a buyer's perspective in regards to what the seller generates?
Extremely. There's a level of confidence that comes out to the buyers when the PN and the financials are set in a proper format, and there is a professionalism to it, and is done on the monthly and the regulars and follows GAAP, because we've seen P&Ls from others that are quality hotels, quality markets, but they're kind of more QuickBooks type of financials. And if you have to piece your financials together, you're already starting from a negative perception of how much do you believe the numbers, right? So the only thing you can do is kind of disregard the other financials and kind of build your own zero-based, ground-up kind of financials. So it is extremely critical. And again, to Greg's point of getting advisors like Helen involved, they're giving you that guidance, saying, hey, you need to get this thing in a market-ready situation. So those financials, the consistency, following the proper accounting methodology, and because once it's in the P&L and you say, hey, there's like $33,000 in here that should not be there, it should take out. I mean, those things are not how you want to approach. The cleaner, the less you have to explain history and focus on what could be the incremental growth, the better outcome you're going to have. So I would say very important.
Yeah, I would agree. I just would add another component to it. I think, it definitely shows, it shows if you're a buyer, it definitely leaves questions in your mind if the financials aren't professionally done. But then the other part of it is, in our business, it's really not about what happened in the past. A lot of times it's about what's going to happen in the future, because we're in a daily business that can quickly change and shift, and it's how are you going to operate going forward. And that's the challenge we constantly have, is we're buying assets, and a lot of times when you get financials that are incomplete or just not done but very professionally, as we go through the numbers, they're way too efficient. They're way too good at what they do from an operational perspective, and we can't duplicate it. And that's where the disconnect a lot of times occur in the pricing too. So.
And just to add to that, I actually had done a session on day one on P&Ls and the importance of good financials for a property. And we followed yesterday with capital markets as well, that each session really explains the importance of financials, not just to a broker when I'm looking at it to be able to analyze, where market pricing might be, but when an owner is looking to refinance a property, I mean, how can they take substandard financials to the lender and ask the lender to start, trying to calculate things and add back things. So I think setting up your financials the right way from the get-go, or starting now and saying, okay, I'm going to start doing it the standardized way so that my lender knows what they're doing, my broker does as well, and I do as well, because even your own financials to yourself are so important to be able to say, why are my expenses high in a certain area? Well, how do you even know that versus standardized expense ratios if you don't calculate it the right way? So there's so many reasons why financials are important.
Great, thank you so much. Can we give the Sharks a round of applause? Fantastic. Is Dylan here? Dylan, I saw him earlier. He might have had to step out. Dylan? Okay. The other Dylan, also known as Ralph, is going to make the announcement.
Hi, this is not Dylan, and this is actually an announcement for our wonderful contestants. You are already the young professionals of the future in this industry, and as such, we're having a reception tonight at the Ice Bar hosted by our Young Professionals group. And so they would be honored if you could join them this evening. I know Dylan was trying to arrange for some transportation, so one way or the other, if we can arrange it for you or if you can join us, you will meet fellow young professionals who are a little bit farther on their journey, but they have a lot of ideas I'm certain that they can share. So thank you so much. Thank you all for staying. We appreciate it. This is our future, and I think we can all agree it's in pretty good hands. One more round of applause. Thanks, everybody. Oh, and then on your way out, please drop your pieces of paper for the hotel you would buy if you were the Shark. All right? Drop your piece of paper in the bucket for the hotel you would buy today if you could. Fair enough? Thanks. Have a great rest of your convention. We appreciate you.